So two very, very important charts to pay attention to, again, cyclically. So not as a day trader, more as a swing trader. And what I want to point your attention to is the top chart, which is the overnight repo. Think of it as money market. Okay. Now, what happened is as the Fed began hiking rates, what happens is people take advantage of those higher yields and they don't want to be in risky assets because you don't want to own risky assets in a high interest rate environment. You'd rather go and capitalize on the higher yields. So people take their money out of stocks and they put it into money market funds, earn the 5%, earn the 5.5% for doing absolutely nothing. Okay. In December, what happened? Mr. Powell came out, and what did he do in December? Oh, sorry, in October, what did Mr. Powell do? In essence, he started to signal that the Fed may no longer need to hike. We saw yields start to move lower, and all of a sudden everyone said, well, hang on a sec. I don't want to take advantage of these yields because they're now moving lower. Therefore, I'd rather move into risk assets. Okay, and that coincides with the rally from October. It all has to do with the money that's sitting in the money market funds. When rates go up, the money comes into those money market funds. When the rates go down, it does the inverse. And it's very clear what big investors, big institutions have been doing over the last 2 years. Now, why does this matter? Well, like I said, 2-year yields went from 4% at the start of this year to 5%. What has the overnight repo done? No one is moving into money market funds. Why? Because they're all sitting in risk markets. Now, why does this matter? Well, because should Mr. Powell tell us, in actual fact, we're not going to cut rates this year, what you will see is you'll see yields move up. You'll see that 5.25% to yield get tested, and you'll likely start to see money come out of risk assets back into the money market funds. Okay, so very much money market funds are a massive driver of risk assets, particularly over the last 2 years.